Well, Dalal Street snaps its 6-week losing streak. The Nifty and the Sensex gain nearly 1%, except FMCG, all sectoral indices end some gains. On the Editors Roundtable, we decode the week gone by on Dalal Street. We put the spotlight on the IT index performance, and also we tell you all the big accidents of 2025. I'm Nigel, and with me, the editors, we have Prashant as well as Dimesh who are joining in. And we're also joined by Gautam Chowcharia, Head of Global Markets, UBS Securities, who joins in. Hi, Gautam. Always good to have you in the studio. Thanks a lot for joining in on Editors Roundtable as well. But gentlemen, how are you all feeling about the week? Looking forward to the long weekend?
Looking forward to the long weekend. I think that's the most important thing, right? And of course, the US-Russia meet, that's going to be a big trigger. And actually, if things go right, we just had one good news in terms of S&P upgrading India. And if there is some settlement with Russia and US, we probably will see a big short covering rally. FIs are 92% short.
Well, absolutely.
That's something to watch out for.
1.85 lakh contracts on the short side, 92%, the highest we've seen all the way since March 2023.
Do they know more than what anybody else know, or do they know more than what even Trump is going to do? I'm surprised, before such a big event, to have 92% short in the India market when India has underperformed.
Yeah, but it was good to see that S&P upgrade that came about, right?
We should ask Gautam about.
Guys, before that, let me tell you the program tomorrow.
Yes. The calendar. Not for tomorrow, the whole...
No, the calendar for tomorrow. For what's happening in Alaska. Okay. Sharad has sent this, right? He says, so they're going to have one-on-one meetings, Trump and Putin. Sensitive matters will be discussed at the summit. Wider meeting with delegations, working breakfast. By the way, this is all happening tomorrow late evening. Okay. So it's going to be, whatever, by the time headlines come through one way or the other, it's going to be, I guess, late evening tomorrow our time or Saturday morning. So there's some names who's going to be on the Russian side, it's going to be on the other side. Central topic is the regulation of the Ukraine crisis. There's a news conference at the end. I think that's
joint press conference.
The joint press conference.
Yes.
So, I mean, I think that is essentially why many are of the opinion that if they're going to go up to the podium and say something, I mean, so something should be done, right?
Something will come.
How is it possible that they're going to go up and say, we'll continue talking? So,
you had me there, actually, Prashant. We said, it's going to happen tomorrow. I thought you were going to tell me what you're going to be doing, but it's good you run us through that.
When Sharon sent that message, I was looking for what are they going to have for... I mean, it's such a detailed message.
But, Gautam, market's in a bit of a flux right now because domestic economy is a little bit soft and we don't know what, Trump is going to do next. But we just concluded the earnings season, which to many weren't as bad or not that great as well, somewhere during the, in the midline. What's your view with regard to the earnings season that went by? Was it satisfactory and you're expecting things to improve from here on?
So, look, earnings season, to be frank, disappointed markets and investors at a broad level. There were a mix of positives and negatives as always. But to me, the negative surprise was basically because its economy and earnings are still reflecting the lag effect of the policy environment which we have been seeing. Yeah. The easing which happened a few months back from RBI, etc. Typically, monetary easing takes 6 months to play through. Typically, in a good times, maybe 3-4 months. So the June quarter was still premature for the easing to reflect in economic growth and earnings. But I guess markets and analysts got a little bit excited early, looking at the headline announcements. And that's where the disappointment came in. I would be worried if we don't see a pickup in the festive season, for example.
But you're expecting the double-digit earnings growth to come about and, for the year?
The base effect itself, from here, should make it easy. And therefore, we should see double-digit, at least for the remaining part of the year. Full year, we'll see where we end up. But the base effect itself makes it easy. But I think
a bit of a near-term question, very, very near-term. Actually, tomorrow morning you'll have the Prime Minister from the Red Fort. And it's a bit of a cliched question also, will we hear something in terms of reforms? But you would agree, right? Last few years, momentum on reforms, etc., is kind of slacked off quite a bit. Yeah. So do you expect directionally, what are the 2 or 3 things which you think, if the government talks about and gives the direction, okay, we're going to do this, it'll make a difference?
Look, when you talk to policymakers in Delhi, including meetings, etc., their stance typically is a lot of the tougher reforms out there is more at the state level rather than the central government level. They do want to or aspire to do stuff around, say, for example, judiciary and bureaucracy, etc. But those are tougher things and you can't put a timeline. Is the current global environment giving them enough of a confidence or excuse to do something more radical? We'll see. Again, we haven't picked up anything beyond what we read in media. But yeah, this is an opportunity for them to act more aggressively.
More
I don't think this will
decisively.
be announced in a 15th August speech. This is more a announcement at a different press conference or a different media rather than a 15th August one.
So, Gautam, one of the anticipation has been that maybe you'll see rationalization of GST rates.
Yeah.
And that will have an impact on a lot of the sectors as well. Post Q1 earnings, in terms of micro sectors, which are the sectors that at a UBS level you guys are bullish on and betting on for the second half?
So I'll talk about the second part later, but from a GST rationalization part, you have to remember that the fiscal space is also limited.
Yeah.
Specifically with we don't know what will happen post-Trump meetings if government needs to support some of the export sectors. So I think near term, will it be in a hurry? We don't know. Again, things might change completely tomorrow or after the US-India talks. Okay. The second half, again, there are pockets which still look very interesting. In general, we are bullish consumption. Okay. And within consumption also, there are pockets which are more interesting, where there's been disruption, but we see clear bottom-up exercise by the company, both in staples as well as retail. Then at a big picture level, you saw big real estate construction activity happening over the last 2-3 years.
Yeah.
Okay. It's kind of slowing a bit, but the second order impact of that is always durables or household improvement sector. And you've seen elements of that in this quarterly season also, where household improvement numbers in select pockets are showing some uptick signs. So that could be the interesting one for the next couple of quarters. The last thing I would say at a big picture thematic, and this is not just for next 6 months, but next 3 to 5 years, in this macro uncertain environment, one of the sectors we are very, very bullish on, and we've done a detailed deep dive, is power equipment sector. Simple maths, India's power capacity addition will be 3x in the next 5 years versus last 5 years. The revenue CAGR for the power equipment sector will be 20% plus. Okay. Earnings for our coverage universe will be 45% for the next 3 years.
I saw that report, and I was very surprised to read a line on BHEL saying that BHEL profit can be 8x in the next 3-4 years. So that was a big headline for me as well, that you are so bullish on, or as a house you are so much bullish on the power OEM.
And it's across all OEMs. I can't comment on India stocks, but thermal and renewables. And simplistically there, again, what our analyst deep dive suggests is I think market underestimates the execution capability of thermal equipment companies.
Yes.
And also overestimates how easily or quickly the supply can come in solar equipment.
I just had one question related to power, and this is something new. We don't know if your analyst has considered this, but I don't think he would have, because all this is happening now, which is normalization of India and China ties, right? If they're going to normalize and they're going to give us something, then they'd want something from us. One of the things they'd want from us is access to markets to sell their products. It's interesting Nimesh mentioned BHEL, because BHEL back in the day when it used to be Chinese import, Chinese boilers, etc., used to be a big reason for why, I mean, the entire space went south, because price points were so much lower. I don't know if we'll see a repeat of that. A lot of Chinese, especially capital goods, power equipment, etc., makes it to the market here. But is that broadly a concern at all? Have you thought of that?
It will always play at everyone's mind. Tough to predict it. But again, if you look at last 15, 20 years, when it was eased, opened up, and then it was also controlled to make sure the local industry has enough protection and support. The initial opening up also forced the incumbents to become more efficient. So that was also the case. I don't think the case exists today where there's a big efficiency gap as such. The second part is the model which is likely to happen from opening access to China, etc., is likely to be them investing here or taking stakes and providing technology. That's a more likely scenario rather than opening up the markets to imports.
Not a big risk, basically, across the board.
Very unlikely. Very unlikely.
Najal, you're looking at the IT space?
Yeah, the IT space for this week itself, surprise, it went ahead and actually it outperformed what the Nifty has done. And that's not really been the case. Even if you look at it year to date, you compare the IT index returns, which are actually, it's down close to around 12%. The Nifty is marginally up by close to around 4%, and the Nasdaq is up, close to around 20%. So tech has actually underperformed. The bulls on the street, they are saying that, the free cash flow yield is at around 3.5–4.5%, depending on, what flows you are factoring in. And in terms of dividend yield as well, it's at around 1.5%. So, downside is protected. But HDFC Securities, they put out this note. They're comparing the valuations of the IT index with the Nasdaq, and they're comparing the IT index with the Nifty. And if they're comparing, the discount that the IT index valuations are trading at in comparison to the Nasdaq, that's widened to around 20%. If you look at it in the last few years, the average has been it trades at a discount of around 15%. Though at its peak in 2023, the discount went as high as around 30%. And from there, tech made a bit of a bottom. So that's one point that they are talking about, that as of now, the discount to the NASDAQ valuations is at around 20%, which is higher than what we've seen on average. The other point they're making is the premium that tech is trading at in comparison to the Nifty, that's come down as well drastically. It's come down to around 15% approximately, which is a sharp discount in comparison to the averages that we have seen of around 23 to around 25%. And that's why they're saying maybe there's some kind of optimism that maybe tech is making a bottom and gradually forming a bottom. What do you make of it, Gautam? You're in that camp, or do you think there are better, fancier sectors to move to? Or do you think that valuation argument where you're looking at the dividend yield, you're looking at the free cash flow yield, you're saying they've already got hammered out of shape, the street already knows that they're not going to grow much. Would you take comfort out there? You're like, no.
So I would argue it's a bit differently.
Okay.
Those arguments always hold and have always been supportive of IT industry in terms of cash flow yields or relative valuations. And in today's market environment, relative valuation always works rather than absolute, much more than absolute. But for IT in India, I think tactically, our analysts think there is room for select stocks to see positive surprises in terms of order flow versus the expectations which are built in, but select stocks. At a broader sector level, our view is more neutralish.
Neutral.
Yeah.
Okay.
Can I just use the IT question, but slightly differently? In your conversations with global funds, etc., and this is something we were discussing earlier, the lack of core AI kind of stocks in India, does that come up, and maybe is that a reason for a bit of an underperformance here as well? I mean, if this is a technology which is really, I mean, all technologies sound very big and large when they come for the first time, but this apparently is like going to fundamentally alter things in a very basic level.
It absolutely comes up very commonly, and I think the debates around this has only picked up rather than died down. It picked up a couple of years back, and then now in the last 3 to 6 months, it's picked up again as to what and how it will impact them. I think the broader view is that in the near term, for the foreseeable future, it may not be that disruptive because they would get more business out of it. Because AI, for it to be implemented across all kinds of businesses, will take years, won't happen overnight. And we need IT services companies to drive that implementation. It may not be as labor or employment intensive as the historical model has been, but it still will drive revenues. It will still give business to them.
But we're talking about using it and to make business across industries efficient.
Yeah.
But I'm talking about creating AI technologies, which is where the value...
So the creating, look, Indian IT services have never been product companies. Okay. Forget AI.
But now is the time more than any, right?
So to expect or think that they will suddenly overnight become productive companies, like, can they invest, make some acquisitions? Possibly. But to expect them to overnight change their DNA into an AI...
Overnight mat karo, 2 saal le lo.
You should ask them. You should ask them. But these discussions have happened, including with the top management of the IT companies and investors. These discussions keep happening.
Okay. All right, Gautam, I'm going to request you just hold that thought. I'll tell you what, we're going to slip into a short break. You come back. Nimish is going to put together a very, very interesting piece. 2025 has seen accidents in more than 15 companies where stocks have fallen 15 to 30% in a single day. Most of them have struggled to reclaim their previous highs. We get into that piece on the other side.